Have you heard the news? Something is shifting in the world of AI. For years, the story was all about getting bigger models, more data, more power. Companies like OpenAI, Google, Anthropic were in a race. They were building what they call frontier models. These are the giant brains in the cloud. They are the GPTs and Geminis of the world. They cost billions to create. And for a while, it seemed like this was the only path forward. The bigger the model, the smarter the AI, the better the future. But now some people are starting to whisper. They're asking a new question. What if that race is over? The main idea, the one that's making investors nervous, is this. Frontier models have run their course. Think about that. The very thing that made these companies famous might be hitting a wall. It's not that the technology is bad, it's that the business model, the whole idea of spending billions on ever larger AIs, might be built on shaky ground. It's a wild thought. All this money, all this hype, and we might be at the end of the beginning. The story is getting more complicated. This isn't just a small worry, it's a fundamental question about the future. Sam Altman from OpenAI, Satya Nadella at Microsoft, Jensen Huang at NVIDIA, they have all been selling a vision of massive, centralized AI intelligence. They told us we needed gigantic data centers. They said we needed more and more powerful chips. This was the moat around their castles. But what happens if that moat starts to dry up? What if the path to smarter AI isn't about building bigger castles, but about something else entirely? A new chapter might be starting. The story starts with a simple word: efficiency. What if you could get the same results, the same smart answers, for a lot less money? This is where the plot thickens. Reports have surfaced that OpenAI might have found a way to dramatically cut its costs. This sounds like great news, right? Cheaper is better for everyone. But in the strange world of AI valuations, good news for technology can be bad news for business. This single development could unravel the entire story that these tech giants have been telling us for years. It's a story of both incredible hope and deep worry. Let's break it down. So, let's talk about this big secret. The word on the street is that OpenAI may have figured out how to cut its inference costs in half. Now, inference is just a fancy word for the work an AI does when you ask it a question. Training builds the brain. Super expensive. Inference is when you actually use it. It's the cost of every single chat, every single summary, every single line of code it writes for you. Cutting that cost in half is a huge deal. It means you can serve twice as many people for the same amount of money. It's a massive technological win. But here is where it gets weird. If this is true, why isn't Sam Altman shouting it from the rooftops? You'd expect a victory lap. Instead, the news came from quiet sources, leaks. The reason might be simple, and a little scary. The entire business case rests on it being incredibly expensive. They've told investors they need hundreds of billions. Their value is tied to costly infrastructure. That's their moat. That's what keeps competitors out. So what happens when you announce you can do it much cheaper? If you tell investors we're 50% more efficient, their first question might be, great, so is the company worth half as much? It undermines the trillion-dollar valuation case. It shrinks the moat. If OpenAI can do it, Google, Gemini, Anthropic, suddenly, the unique advantage disappears. It's an innovator's dilemma. Tech up, business story down. They reportedly tested this first on users who weren't even logged in. Why them? A low-risk group. If the cheaper method produces odd hallucinations, who's going to complain? A random, unregistered user. It's a safe way to test new tech, but it shows caution. Making AI cheaper isn't a simple upgrade. It could change the entire game. They must play their cards very carefully. The stakes are just too high. To really get this, we have to talk about the hardware, the guts of the machine. It all comes down to GPUs, the powerful chips made famous by companies like NVIDIA. Think of a GPU as a specialized brain for doing lots of math at once. AI models, especially the big ones, are loaded into the GPU's memory, called VRAM. The bigger the model, the more VRAM you need. This is why NVIDIA's chips have become as valuable as gold. Every time you chat with an AI, the conversation itself, the tokens, the words, also has to be stored in that VRAM. Now, imagine thousands or millions of people are all talking to the AI at the same time. That's a lot of conversations to juggle. All that data takes up space in the VRAM. This is where the new efficiency tricks come in. Engineers are finding clever ways to organize and manage that memory. They're developing predictive techniques to handle how tokens are stored. It's like playing a high-stakes game of Tetris with data. Pack it better, serve more users, costs fall fast. But this high-stakes game has risks. These memory optimization tricks are incredibly complex. If you get it wrong, the AI can make mistakes far weirder than normal hallucinations. It could mix up conversations. It could spit out gibberish. It could break in new ways. This is why they test on anonymous users first. The potential for a brand-damaging mess-up is real. It's a delicate balance between saving money and maintaining quality and safety. We've been told we need data centers the size of small cities, consuming enormous amounts of power. But if efficiency keeps improving, do we really need that much? Companies like Meta are already finding they have excess compute to rent out. SpaceX apparently had hundreds of thousands of GPUs just sitting around. If we already have too much capacity, the argument for building more gets weaker every day. It's a head-scratcher. The demand might not be as infinite as we were led to believe. Here's the other big problem for companies like OpenAI. Even if they invent a revolutionary, cost-saving technology, how long can they keep it a secret? In tech, especially with open source, good ideas spread like wildfire. If it's a software trick, it can be copied. One smart team at OpenAI might figure it out, but rivals or open-source contributors could discover the same trick tomorrow. Then, the advantage is gone. This creates what's called a race to the bottom. OpenAI drops prices. Google and Anthropic drop too. Suddenly, everyone makes less money. There are models like DeepSeek that are a fraction of OpenAI's cost. If they copy the tricks, prices fall even further. Big profits shrink. Sky-high valuations wobble. You're constantly looking over your shoulder, competing on quality and price. In a price war, nobody really wins. Companies burn through cash. The huge margins never appear. As one expert put it, you don't have to outrun the tiger, just the other guy. And there are a lot of other guys. Competition comes from giants and from the global open-source community, replicating breakthroughs at astonishing speed. That's why a software moat is fragile, more like a shallow ditch than a wall. And don't forget Elon Musk's XAI and Grok. New challengers keep appearing, fast, adding even more pressure on price and pace. Anthropic pushes safety and AGI ambitions, plus advanced research stacks that aim for cheaper, safer scale. Microsoft's deep integrations across Windows, Office, and Azure create distribution power that pure labs just don't have. In today's market, the pressure to innovate is immense, but the ability to keep profits from innovation is under constant threat. For a long time, the focus was on the biggest, most powerful frontier models. But there's a quiet revolution with smaller models. You don't need a supercomputer for most AI tasks. Summarizing an email, fixing a typo, brainstorming a headline. Smaller models can run on your phone, in your browser, or on a regular laptop. Fast, cheap, and private. Google is building an ecosystem of tiny to large models. Chrome, Android, laptop, Cloud Gemini. For 99% of tasks, the frontier model is never used. It's only for that last 1% of hard problems. If you only need the expensive tool 1% of the time, does that company deserve a $1 trillion valuation? That's the tough question for OpenAI. Their identity is being the frontier. But if value lives in everyday products and integrations, they could be vulnerable. Microsoft, Google, Apple. They already have the products, operating systems, browsers, and apps billions use. They can bake intelligence into what people already use. OpenAI doesn't have that. They're a destination you visit. Building that ecosystem would take years and a fortune, against the biggest companies on Earth. There's another layer to this story, and it's political. AI isn't just a technology anymore. It's national security and industrial power. After seeing how fast access can be cut off, countries are getting nervous. They've decided AI is as important as a military. Every country now wants its own AI data centers. France, Germany, India, and more. They don't want dependence on a few American companies. Here's the twist. The pure business case for more build-outs may be weakening. But governments are throwing money at them. Great news for essential component makers, especially memory, where only a few firms can supply at scale. For NVIDIA and Jensen Huang, it's more complex. Google's TPUs, Meta with Broadcom, and many custom inference chips. Explosive GPU growth can't last forever. At some point, the market hits a limit. So NVIDIA expands new CPUs and data center architecture to jump to the next cycle before this one ends. So, where does this leave us? It feels like we're at a turning point. The era of pure hype might be ending, and a more practical era may be beginning. Frontier models like GPT will still improve, maybe more slowly, like an annual OS update. The real action may shift from model size to product smartness. We may move from AI chatbots to AI-powered everything, phones, cars, productivity tools. That could make AI more accessible, more affordable, and more integrated into our daily lives. Instead of one giant brain in the cloud, we might have thousands of smaller specialized intelligences helping quietly in the background. Big AI labs face a tough road. Massive valuations built on dominance are starting to crumble. They need to push the frontier, but the real money may be in boring practical tools they aren't set up to build. And others already own the pipelines to customers. Not all of them will survive. So watch the costs, watch open source, watch how fast ideas get copied, and most importantly, watch the products. The ultimate test isn't philosophy. It's how well AI helps you get through your day. Do we want a magical genie in a bottle or a smart and helpful assistant in our pocket? The answer is probably both. But the future may belong to the one that is most real. Frontier models haven't failed. They've just reached a new phase. From OpenAI and Microsoft to NVIDIA, Google, Anthropic, and new players like xAI with Grok, the next chapter is about focus and fit. Less castle building, more product building, less spectacle, more usefulness. Because the real magic of AI isn't the biggest brain, it's the best help. If you found this helpful, tap like, subscribe, and share. See you in the next one.